All right, let's get started. Welcome to our meeting tonight, and I want to go over a few things to help you guys. And our material this evening, we're really focusing on Chapter 7 and Chapter 8. Let's see, I don't have anything on the screen yet, so don't think that anything's wrong with your computer. But we do have Chapter 7 and 8, we have a nice discussion question going, our critical thinking, our mastery exercises. And we also have some supplemental articles too on Sarbanes-Oxley Act of 2002. That's from the Journal of Accounting, a very good article. And also another supplemental article on healthcare, financial management, very relevant. So that's the topics that you guys will be working on this week and probably are about maybe a third or halfway through. I will be checking in, of course, every day until then. So let me know if you have any questions on things that I did not cover. And let's see, I'll get something up on the screen for Chapter 7 for you guys. So give me a second for that. And I will share my screen. Okay. And again, if it's too small or you can't see it well, do not worry. I can send this to you, but I'm just going to go over some things about AIS, Accounting Information Systems. And let me first let you know, this is a chapter that is really important because the whole foundation of our accounting data right now is in our information systems, right? If we were talking maybe 10, 15 years ago, there would have been some manual systems, dual systems, things like that. But right now, everything's going to be in our systems. And so when we have either an internal audit, an external audit of our system, these auditors and examiners can actually ask to obtain the data directly from your data processing system, even if it's a third-party system, or directly from your IT department. So there's really the security of it, the importance of it, the accuracy of it is of extreme importance. So we're collecting this data, we're inputting data all period, and we're entering these events, right? We make an entry because there's an event, as we see, and we're coming up with reports that are going to be relevant and useful to the users. And this is really what's happening. If you notice, we have something that starts with a source document, and if you follow my mouse, then we have an input device, which can be a number of things. It can be swiping the card, it can be a keyboard, barcode reader, modem, scanners, any input device. And then processing the information through your desktop computer or your laptop, or even in some places that might be just a tablet, right, a little iPad. And then if this information is going to the cloud, it's going to be stored in the cloud and then available for output devices. So in this example, we see that it's being projected how Best Buy is doing in this example. So the cloud storage is not necessarily the only way that things are stored, of course, but it is a very good way, right? Very good way, especially for disaster recovery. And as you see, some other ideas for storage, there can be an external hard drive. You can put things on CDs and DVDs, on tape, paper documents. And you'll realize that I'm especially mindful of this because of where I am. If some of you are in areas that have been prone to, let's say, natural disasters or lots of power outages, things like that. Being in South Florida, we have we're very prone to hurricanes, and we've had a really quiet time for the last couple of years, but we also went through 26 letters of the alphabet years ago, and even into the Greek alphabet, which meant that we had like 30 hurricanes, something like that, so in one season. So I would say that no matter what you have, either you have an alternate site, an alternate hot site, cloud storage is great. Paper documents are not going to do us much good if we cannot get to them. And of course, if they're damaged by flood or inaccessible. So that's really my favorite, but you'll see all of these. Next, let's spend a moment on special journals. And special journals, we have them in accounting. We have some that are put together really just to simplify the process so that we don't have to record every column in a journal. So since we get together, we know, for example, let's say the sales journal, we know that every time we record a sale, there's going to be certain factors that are going to be the same for our books. So we're just going to put all the entries there. And we can put the things that we need to specifically, let's say the date, the amount, those things can be entered, of course, individually, which are not going to stay the same. But then again, we know that it is a sale. And so we can save some steps in entering journal entries. We can also have purchases journals, cash receipts journals, cash disbursements, and then a general journal. So again, it's used to save time. You can always enter things without special journals. You can always enter a debit and a credit anywhere you want in your system, right? But special journals do save time and save steps. Then we have subsidiary ledgers, and we see the characteristics, amount due from customers or amount owed to creditors. And for amounts due from customers, we have accounts receivable. We can see what is due from customers in that subsidiary ledger. The accounts receivable ledger is where we will look for it. And then again, if we have amounts owed to us, owed to creditors, we have accounts payable, what we owe to our creditors, and we can look at the accounts payable ledger. So as we see, if we visualize these ledgers, almost in ledger cards is what they used to be, actual cards, and in this you can actually see them looking a lot like cards. But as we see, everything must balance out in the general ledger, just like the accounting equation has to balance the general ledger, the debits must equal the credits. And as we see some sales journal entries, the accounts receivable ledger, and then the general ledger. These are just really good visuals for you to see what's going on, especially if a lot of it is not, you don't see some of those steps because they're automated. And we see that the balance of the control account has to equal the accounts in the accounts receivable subsidiary ledger. Very important that we see what's happening, that everything is flowing through properly to the subsidiary ledgers, that they balance out and reconcile. Sales tax, next sales tax in the chapter. Very simple. It's something that we set aside. It's actually a liability if we are collecting sales tax because we are not the state, right? We're collecting it for the state that we live in, and we're going to report it to them. So we see that that is set up as a temporary holding place in sales taxes payable until that time of the month that we would be submitting sales tax to the state. Next account, returns and allowances. And again, something that we definitely need to keep track of, especially because this is an area that's very hot in internal controls. If you ever notice when we read about returns and allowances, it is one area that should be, hopefully, heavily monitored by the firm, by the auditor or the controller, CFO, managers, because there's a lot of areas in returns that can go wrong, very, very wrong, where we can have episodes of fraud, episodes of impropriety. If you ever notice, sometimes returns are done in a store at a different area than where you purchase things, and that's the reason, is that they want to make sure that they're even keeping a special eye on those. Okay, this page we see cash receipts types. We can have 3 different types that are mentioned here: cash from credit customers, cash from cash sales, cash from other sources. You can think about maybe what some of those other sources would be. And notice how we want to make sure we balance our debits equal our credits, the 32,350 in this example. All right, after we make entries, everything must stay in balance. Our general ledger stays in balance. Our balance sheet stays in balance, the accounting equation, very important. By the way, if you do work personally with QuickBooks ever, and then you're new to accounting in the classroom, it might be a little bit misleading, because in QuickBooks, we sometimes can make just one side of an entry, and the system is making the other side of the entry automatically, because it's really for non-accountants. They make it so it's so simple that non-accountants, I hate to say so simple, because learning it is a challenge too, especially when you learn, you've been given a temporary access code and you learn by yourself. But once you're really using it all the time, you don't have to be an accountant to use it. And that's the beauty of it. So the idea is that having a double entry system of accounting is not essential. However, some accountants dislike QuickBooks for that same reason. They like to feel that they're making a debit and a credit, that each debit has an equal and offsetting credit. So it's kind of a running sort of a joke how accountants really only tolerate QuickBooks, but probably it's best for their clients, but they may not pick it if they were keeping their own books. And again, controversial, not across the board 100%, but it is something, and that's the reason. So again, we're just going to balance out more accounts. We want to prove that the balances are accurate to the subledgers. And here's some ideas. Here's some things that, since you may say, well, okay, I don't like QuickBooks, or I like to know that I'm making both sides of my entries. There's other options. As we see, Peachtree is probably one of the biggest competitors to QuickBooks. There's FreshBooks I see out there, which is good for very small businesses. There's just a lot of systems, but QuickBooks is just so popular, and you'll find that for the small companies, if you are the accountant and you're going to recommend it, if it's a company you're keeping the books for, with QuickBooks, you can share it in the cloud, you can check their work in the cloud, you can adjust their books, close their books, reconcile their accounts, all without even seeing your client. So it's really nice. And you'll find that with other accounting software too, but QuickBooks and Intuit has done a really good job of putting together a decent product. In addition, we didn't really see that, but QuickBooks has specialized programs for various industries. So QuickBooks has QuickBooks for construction companies, QuickBooks for retailers, QuickBooks for the accountant themselves to handle many companies in a pro version. And onto data processing, there can be a couple of ways. We can have transactions that are processed immediately. And then in some cases, we're going to have transaction processing done in batches, where we accumulate information and it's processed all at one time of the day, the week, or the month. And sometimes we'll see that, like an example of that. I noticed my bank seems to post things probably once, all at once, in the middle of the night. And so they must be collecting them in batch processing them to my account. And there's companies that do that too. This visual, just workstations to a server, if that's the setup that your firm has. And then ERP, Enterprise Resource Planning Software. And ERP is a really good topic. It's there are some good products by Oracle, SAP, and good products. And we see that SAP has a big portion of the market. There's also some by Sage. I believe Sage might be the ones that make Peachtree, if I remember correctly, and SSA. So we see cloud computing very, very hot, right? Everything that we do now, we all want, at least I want, everything I do on the cloud. Absolutely. I don't even want to have Microsoft Office without the cloud, and I think I pay more because I just want to have it in the cloud. So I don't want any disks lying around. I don't want to worry about losing a disk, buying a new computer, finding disks or anything. So the cloud is really the way that things are going pretty quickly. And so what they're providing, as we see, is a service rather than a product, right? We're doing the computing in the cloud, and they're providing a service. We don't own a product per se. So with the Microsoft Office in the cloud, we don't really own a disk. We don't own a version. Whenever it updates, we go in the cloud, and it updates, asks us if we want the newest version. And it takes up less space on your computer, right? Less memory. We want it on everything, as you see. We want it on our phones, our tablets, our laptops, cloud computing. Okay, just a little bit, and I'm going to just go over this before we go, a little bit about segments. And segment reporting, you'll see a little more of this in some other classes, but segment reporting is just when a company is involved in a bunch of things. And let's say they have a couple of different, let's say different things that they sell, different business ventures that they're into. And so they can divide them into segments or divisions. And as we see in the graphic, we have, let's say, in this thing, geographic, export sales, major customers. We can report in all those different ways, and we can report in different activities. If the company is doing different activities, that is a segment too. And this segment can have its own ratios. As we see, segment return on assets. So just like you can do a ratio for the whole firm, you can do a ratio just for a segment of the company. Callaway Golf, they're in Georgia. And we see that it operates in two business segments, golf clubs and golf balls. And I believe they also own some of the courses, but I'm not 100% sure. But anyway, they're separating those two into segments so that they can see how each segment is doing. And why we'd want to do that? Well, we'd want to keep track, right? Is one segment doing okay? Does it need more attention? Combining the two can actually really mask the things that we need to give attention to if we just combine them and never look at them separately as segments. So it might seem like that would be impossible to forget, but looking at them as segments, looking at them with their own ratios, their own financial analysis is a good idea. And that is chapter 7. All right, so I'm going to turn off my screen sharing. All right. So if you guys have any questions as you go forward into this week, just let me know. I'm checking in every day, of course, as you've seen. And we're heading down the home stretch, so it shouldn't be too bad. And I really enjoy the very lively discussions that you guys participate in each week. I totally am enjoying the posts. And the questions that I get have been really, really spot on. Absolutely. Some great questions that I get. So don't hesitate to shout out to me at any time, and enjoy the rest of class. Have a good evening, guys. Bye-bye.